Am I right in thinking that your seed rounds were the first time that you and your co-founder had to negotiate terms with a VC?
It was our first time. I'm sure we didn't get kind of everything right. Investors generally are very shrewd operators. All of them are looking for a good deal. If not everyone's telling you you're too expensive, then you probably haven't set your price high enough. It's a lot about how you kind of play the game a little bit and set expectations. Really what you want to do initially is focus on selling them the company and you as people, and leave the valuation in terms once they've really bought into the mission and vision and what you're trying to achieve.
You're not an investment expert like the other people are. So you have to spend time to learn how they operate, and angel investors operate differently from VCs, from differently to private equity.
What you need to do is walk into those series of meetings having really understood your market opportunity or your market size through at least 4 or 5 different lenses. When one is challenged, you can come at it from another point of view. And that might be by understanding what your complementary markets look like, understanding the size of the biggest 2 or 3 players in the market, in the country you're in and in the countries you're looking to go into, taking each of those measures and using those as multiple lenses in which you can try and put your argument across as clearly as possible around what your market potential looks like.
The highest valuation possible is not always the kind of best outcome. Keeping control, being really clear on what investors want from you and what controls they have over the company are equally important, or if not more important. We actually took a lower valuation in our latest round than others we were offered, but for us it was more important that we were really aligned with our investors. We weren't trying to create terms where they had a disproportionate amount of control over what we're doing.
Kevin, your agency developed a global marketplace for a startup, and you took equity as part payment for that project.
We get approached several times a year, and sometimes, and only sometimes, you get something that puts your ears up and you think, oh, I'd like to have a look at that. The agency will be taking a risk, and potentially a big risk, so make sure your concept is credible and approach the agency with a business proposition. They will need to know and have confidence in both the concept and the end goal for the business. Work together on a piece of work at the beginning so you get to know each other and ensure that you can work together. There's nothing worse than getting halfway through a project and realising that you're not aligned.
The real challenge when direct-to-consumer brands get fixed on needing investment, that it can just be relentless every 6 months having to raise more money. If you raise at very high valuations, you can find yourself going into a down round if you have a couple of bad months. So those are all things that we've really tried to watch out for. Investors should expect founders to negotiate really hard, and that's something we always try and do, and we always try and back up our data. You've got so much data out there on which companies have raised money, at what valuations, what market sizes, and I think as long as you're really clear on those numbers and you're really confident, then investors will come on that journey with you.
How would you help a brand that is on that journey of seeking investment to map the market potential of the category they're in?
So most people start by looking at what's the retail segment size I'm going into, and then let's split that retail segment size down by demographics, socio-economics, gender, age, whatever it is that most closely defines the audience you're going after, and then sub-segment that by what part of that audience can I reach through the channels that I'm going to invest in, and then the trajectory of that channel growth. If you're saying that only 20% of people currently buy direct to consumer, but that was 10% last year, then you've got a pretty strong growth trajectory. And then you're going to look at that through the multiple markets you might be involved in. So you're going to look at that both in the UK and the US, Germany, or wherever you've already tried this out.